Hey guys, so I want to take a look at Monero. The ticker for this is XMR, and I'm currently on the weekly time frame. Now, I really like Monero because of what it has to offer. It's fast, it's private, and it has low fees. And I think I think when the powers that be tried to roll out their central bank digital currencies, and if they're successful with their goals of reducing cash use or getting rid of cash entirely, I think privacy coins like Monero are really going to come into their own, and the demand for them is going to skyrocket. But anyway, that's neither here or there. I just want to look at the technicals for this, and yeah, it looks like we've recently broken out of a long-term pattern. So from the peak, which was in May 21, so over 2 years, we've been in this downtrend, right? You see this this downward resistance line here. We just broke out of it in actually just a few weeks ago. Just a little under a month ago, we finally broke out of this 2-year downtrend. So yeah, I mean, that's a very positive development. So just a recap of the price action that we've been seeing, we have this horizontal line, which served as a resistance right here. Oh, sorry, resistance right here, resistance right here. When we broke above it, we came down to back test it. It flipped to support. And then we had like our run up to the all-time high. And then we have this 2-year downtrend where this horizontal line served as a support once again, and then once again here. So if you want to chart Monero for yourself, I would recommend marking this horizontal line just in case like the price flops and comes back to it. You can look for a long entry at that point. So the price is about $114. But yeah, and this is on the weekly chart, so keep in mind that you can have wicks that come down. So yeah, I mean, you may get stopped out. Maybe you want to make sure what you notice here is like the wicks would come down, but the bodies always close above it. So if you're going to enter a long or a short based on this particular level, maybe wait for the candle body to close before you enter the trade. Okay, so zooming out here, actually this has been trading very technically. So if I'm going to run a Fibonacci retracement here from the start, this is around 2015, when we initiated the bull cycle 2 cycles ago. We were at 21 cents and we went all the way up to to $468. Man, imagine you were accumulating down here, you'd be set for life. But on the retracement, we came right down and we bounced up to 382 Fibonacci retracement level, so that worked out. And we came down to the low of that bear market at $25. So we went from $464 to $25. Guys, this is why you have to sell your altcoins in the during the bull market, so you don't have to experience this gut-wrenching feeling of your net worth just declining steadily every day. So let's run another fib from the bottom of this bear market up to the top. So from this point, we went from $26 back up. We went back up. Well, we went a little bit higher. We went around a little over $500. And as you can see, this time we retraced down to the 50% Fibonacci, and we just bounced off. So we got support at the 50% Fibonacci retracement from the swing low to the swing high, and we just recently broke out of a 2-year downtrend. So this actually looks really good. This looks really good. So this being the weekly time frame, let's take a look at the shorter time frame, and I'm going to use a different chart for that to see if we can find an entry. So I'll give you more specific price targets. Okay, so again, I'm on the weekly, but I have a different indicator pulled up. So this indicator is called Price Action Concepts. It's a premium indicator. I'll link it in the pinned comment. But this marks out very significant levels on the chart where we have a lot of transaction volume. So on the weekly chart, you'll see that this particular level up here, and it's from $261 to $288. That's the next significant level of resistance on the weekly chart. But if I go down to the shorter time frame, we're going to have levels of resistance before that. So let's take a look. Okay. So yeah, right up here, if we break this current level, which it actually looks pretty good. The level we want to close above, the two levels we want to close above on this daily time frame would be this previous day high, which is $168. And then if we break that, the level you want to look at here is $172 and about 28 cents. So if you're able to get a daily candle above that, look for the next level to be right up here, this kind of previous high up here. And the range for that is 182.50 up to 186.99. So let's go to the 4-hour and see if we have any other obstacles in our way. Yeah, maybe up here, but I already mentioned this level, I believe. The top would be about 172. After that, then where the coast is clear, I imagine to get up to this level right here. So this would be a resistance, I'm assuming, and 176. Yeah, again. So the level there, 182 to 186. So this would be the next level I'm looking at conditionally, if we break above the previous day high and we have a daily close above this $172 level. Then that's the next level you want to look at. Now, if we break down from here, what I'm going to look, I would look to target the previous day low, which would be back down around here at $163. If it comes down, I would look more towards the start of this order block, which is about $164.06. So yeah, as you can see, we're at a resistance and we're kind of turning around at this resistance. See this cluster in this order block. So yeah, just basically with trading, nobody really knows what direction it's going to go. The long-term outlook on this is positive, is bullish, but until then, you just identify your swing high, your swing low, your support and resistance level, and you just trade within those levels. And ideally, what you want to do, for example, if the price comes down to this support level, this previous day low, you would look to enter a long, or not telling you what to do, I would look to enter a long and I would just place a stop just below it. That's all trading is, guys, is taking just very selective trades that offer a good risk-reward ratio. So one thing I want to actually look at now that I have this chart open, I want to go to the monthly, and I'll get this off of here. And I want to look at the stochastic. No, that's not it. Here. Where is it here? Yeah. Okay. This is a momentum oscillator. It's called the Ultimate Stochastic. It's a paid indicator. Again, that will be linked in the pinned comment. But you'll see that when we came to the bear market lows in the last cycle, as soon as we switched green, that marked pretty much our entire bull market, right? Then red all the way marked our entire bear market. And if you look what just recently happened, guys, we just switched to green. So if that pattern repeats, then maybe we are in the initial phase of the bull market, which actually I'm more biased towards that. I feel that we are in the initial stage of a new bull market. And this price action here, not only does the oscillator indicate that, but this price action where we just broke out of a 2-year downtrend also indicates that. Now, if you mark this level, definitely if you want to chart this, mark this, put this this downsloping resistance line on your chart. And if the price does break down and we go beyond that previous day low, then I would look at this level to act as a support level. So actually, since we broke out of this, we haven't actually tested it as support. Normally, when you have a very significant resistance level like this, when you break out, you'll come back to retest it. And hopefully, if that happens, we get the support resistance flip, and then we start making our moves to the much higher prices. But maybe that won't even happen. Maybe that won't happen. But anyway, we are at a resistance level right now. But yeah, guys, that's Monero. Quick rundown on Monero. All right, guys. If you're not subscribed and you want to get notified when I release these videos, just hit the subscribe button, hit the bell, press on all, and yeah, that about wraps it up. Have a good day.